On Business Incorporated today, Africa Development Bank says Africa losing 50% GDP to climate change. And Egypt and Russia plan to link networks to support payments in rubles by end of 2022. And Cameroonian shippers begin cargo import through Nigeria. Let's begin, as always, with market numbers from Africa, where it was mostly negative at intraday. Nigeria's NGX was traded marginally up 0.02%, while the JSE fell 0.4% at intraday. Elsewhere, Egypt EGX 30 was also in negative territory. It was down 0.12%, while the Nairobi Securities Exchange closed Monday's session deeply in the red. And in the Middle East, it's positive sentiment seen at intraday. In the UAE, the Abu Dhabi and Dubai indexes were trading in the green. Both indexes were up 0.4% and 1.07% each at intraday. Elsewhere in the region, Saudi Arabia inched up 0.23%, while the Qatari index rose almost 1% at intraday. Now to the EU, where Germany is headed into a winter recession that could see its economy shrink in 2023. And that's the newest prognosis from one of the country's most important economic think tanks. Stephen Beersley with Deutsche Welle in Berlin has more of this. Stephen, how bad could 2023 be for the German economy?
Well, according to this new report, the German economy could shrink by almost 0.5% in 2023. That's according to the IFO Institute from Munich. That's one of the most highly regarded economic think tanks here in Germany, and that was during its fall prognosis. It also says that growth should remain positive through the end of this year, finishing at 1.6%. Now, this is quite a shift over the last few months for IFO. With its summer prognosis in June, it forecast positive growth for 2023 of close to 4%. So what has changed in that time? Well, you can say that a kind of worst case scenario has panned out actually in the past few months, and that is that Russia has stopped most deliveries of natural gas into Germany. That was something that was suspected could happen in the summer, and now it's mostly played out that way. Russia, of course, stopping deliveries through its largest pipeline, Nord Stream 1, although there are some other deliveries taking place. The point is, though, that utilities are not getting the gas that they thought they were going to get, but they still have to deliver to their end customers. They now have to buy that on the spot market at much higher rates, and someone ultimately has to pay the bill. It's going to be partly households, it's going to be partly the utilities, and then the government will also have to foot part of that bill, which means that taxpayers, of course, are ultimately on the hook. And that is what is looming over economic activity in the next few months, if not years.
Gloomy picture there, Stephen. But what does that mean for normal Germans and in businesses?
Right, that means a lowering of economic activity. If everyone's shelling out more money for energy prices, they have more money to spend, less money to spend elsewhere. And that means that we can expect to see contractions of production, as some companies, for example, don't even have the inputs that they need, natural gas in this case. We can expect to see households tightening their spending as they shell out more money for energy bills. And so that's going to have a ripple effect down into the economy. Now, we've already seen earlier this summer, as the fears of recession were growing, we saw that some sectors were already starting to feel the pain, especially those linked to discretionary spending. We think in particular of furniture stores, of apparel, retailers, for example. The good times from the COVID pandemic, in which there was a bit more discretionary money on hand, that's fallen off a bit. They've gone through rounds of layoffs. Also, the tech sector has pulled back a lot as forecasts have grown dimmer and dimmer. And now it's going to be the overall economy, and especially the industrial areas, that could feel the pain in winter. As more of that gas is routed to households who will need it for heating, and less of it goes to industry, or that the prices in general rise for industrial use of natural gas, forcing many of those users to actually curtail production altogether, that having ripple effects across the economy. We can expect more insolvencies from smaller businesses. We're already seeing signs of that. And then, of course, job losses would arise out of that as well.
It seems like it's going to be a cold winter in Germany. Now, what are we seeing from markets now?
Yeah, all eyes are on the U.S., as they often are around this time of the month when there's new inflation data coming out. And the reason for that is because the Federal Reserve will use that data to decide what it wants to do with market rates, the interest rates, that is. And that has a ripple effect across global markets. So there is an expectation that inflation will slacken somewhat in the U.S. and that there has been a turning point in the fight against inflation. So markets are largely in a more buoyant mood, although we have seen in Europe today that they're a little bit more tepid in terms of their reaction. We've seen slight gains from Paris and Frankfurt, their leading indexes. The FTSE 100 in London actually down slightly this morning. That's compared to yesterday, in which European markets reacted a bit more optimistically based on what they thought was going to be good data. So we have to wait and see where things are going. But right now, it's a wait-and-see position across much of Europe.
Thanks so much, Steve. And now to Asia markets, where stocks were higher on Tuesday as investors look ahead to the U.S. inflation data for the month of August, which is expected to decline. South Korea's Kospi rose 2.74% to 2,449.54 points, while the Kospi index fell on its return to trade after a holiday on Monday, led by Samsung Electronics, which advanced 4.5%, and SK Hynix that rose 4.87%. The Nikkei 225 in Japan, however, gained 0.25%, and the Topix index ticked 0.32% higher to 1,986. In Australia, the S&P ASX rose 0.65% to 7,009.7 points. Mainland China, Shanghai's composite ticked fractionally higher to 3,263 points, while the Shenzhen component added 0.38%. The Hang Seng index in Hong Kong was 0.17% lower in the final hour of trade. Now, stock futures in the U.S. were cautiously higher early on Tuesday as investors waited for Tuesday's consumer price index report. Dow Jones Industrial Average futures were up 0.28%. S&P 500 futures were up 0.34%. NASDAQ gained 0.33%. Investors' confidence has been bolstered by the belief that inflation has already peaked. A weaker dollar and military success in Ukraine also supported stocks. On Tuesday, all eyes will be on the August CPI report, which is expected to show a 0.1% decrease in headline inflation on a monthly basis. The report is one of the last the Fed will see ahead of their September meeting, where they're expected to deliver their third consecutive 0.75% interest rate hike to tame inflation. Now, oil prices fell in volatile trade early on Tuesday as investor concerns about lower demand in China, the world's biggest crude importer, and further increases in U.S. and European interest rates offset worries about tight fuel supplies ahead of winter. Brent crude slid 0.4% to $93.66 a barrel, while the WTI crude declined by 0.2% to $87.58 a barrel. Meanwhile, according to data from the United States Department of Energy, the Strategic Petroleum Reserve, SPR, fell 8.4 million barrels to 434.1 million barrels in the week ended September the 9th, the lowest since October 1984. Gold prices held firm in early trade on Tuesday near a two-week high hit in the previous session, helped by a subdued dollar, while investors awaited U.S. inflation data that could provide cues on the Federal Reserve's interest rate hike path. Spot gold rose 0.1% to $1,725.70 per ounce, while U.S. gold futures were down 0.2%. Spot silver rose 0.3% per ounce. Platinum slipped 0.4% to $903.82. And palladium fell 0.3% to $2,259.04. Now, after days of torrential rain, salt miners watched in despair as flood waters breached a meters-wide gap on the banks of Senegal's Pink Lake and washed away thousands of dollars worth of salt mounds which had been gathered. Senegal, like other countries in West and Central Africa region, has recorded above normal rainfall in recent weeks that unleashed destructive floods after poor drainage systems failed. Let's take a look at this report.
The Pink Lake, separated by a strip of dune from the Atlantic Ocean, is situated about 35 kilometers from Senegal's capital, Dakar. It's one of the country's most visited sites and under consideration as a UNESCO World Heritage Site. Officially known as Lake Reptba, it derives its pinkish hue from an algae that produces the colored pigment, and like the Dead Sea, it's also known for its high salt content. Babakaba is one of over 3,000 people who earn a living from the lake, including hundreds of divers who manually rake salt from the bottom of the lake, producing around 38,000 tons annually. As persistent rains drenched Senegal with around 126 millimeters recorded during one spell over the past weekend, according to the Water and Sanitation Ministry, drainage systems and retention reservoirs were quickly overwhelmed and channeled floodwaters towards the lake.
We support our families by working the salt. In this area of almost 20 meters, there was salt everywhere. The rainwater washed it away. Now those who can afford it pay excavators between 35,000 and 300,000 to move their salt, while those who cannot afford it pay women to work at a rate of 50 to 100 per basin, depending on the distance.
According to Senegal's Civil Aviation and Meteorological Agency, rainfall above 50 millimeters in the country is considered extreme. Abdoulaye Fati, a hydrologist and lecturer at Dakar's Cheikh Anta Diop University, says rising water levels in surrounding plateaus naturally poured into the low-lying lake. He added that the water could be contaminated.
To be honest, in Senegal, nobody can distinguish between rainwater and wastewater. Both flow together, and that can create health problems. Look in the neighborhood, you will see a quantity of water falling from the sky, and naturally, people will start to open their wastewater drains. So the rain will stop, and we will still see a 24-hour flow. And this is directly related to public health because the air is polluted. So everything you breathe is not good. So lung disease, coughing, all that develops.
With a month to go before the end of Senegal's June to October rainy season, other businesses around the lake, including restaurants and flatboats operators who take tourists on the lake, are counting their losses and worried about the future. Boat hauls on the lake have become dangerous because the lake depth has increased.
Next, updates from the commodities space right after the break. This is Business Incorporated. Welcome back. We dive into a very important commodity, which is vegetable oil. Vegetable oils are essential ingredients for cooking globally, and especially in Nigeria. They range from palm oil, sunflower oil, corn oil, soybean oil, olive oil, canola oil, and groundnut oil, and used primarily for making soups, frying and grilling. Unfortunately, the price of this essential commodity has risen by 30% in tandem with the rate of food inflation, which is currently at 22.02% in Nigeria. Abimbola Adigun, analyst at financial derivatives company, joins me to talk about this rise in price for vegetable oils. It's good to have you, Abimbola.
Thank you for having me.
Now, so apart from the rise in price due to inflation, what other factors are driving the price of vegetable oil, the surge you're seeing now?
Okay, so these vegetable oils that we're consuming in Nigeria, it's not all of them that are locally produced. We import some of them. So the countries in which exports these oils, there have been some things, there have been some factors that have actually affected the price in oil. So I'm going to look at it from the Russian-Ukraine war. The Russian-Ukraine war. Yeah. So Ukraine is one of the largest exporters of sunflower oil, and due to the Russian-Ukraine war, it's affected the supply of oil, and then the fact that it has affected the supply of oil, it has pushed the price of sunflower oil. So that's one of the reasons. Mind you, all these oils, like vegetable oil is a generic name for all these oil. We have palm oil, sunflower oil, just like you said before. So I'm saying, like I just mentioned Russia and Ukraine war. Then we have the global food crisis. I'm going to use Canada, for example. Canada is one of the largest exporters of rapeseed oil. So now, due to the climate change, it has affected the supply or the production and quantity of rapeseed oil produced in Canada. Hence, it has affected the price. Then there's a hike in price of rapeseed oil. Then if you look at export restrictions, so Indonesia is one of the highest exporters of palm oil. And then the government has actually put restrictions on the exportation of palm oil based on the local production of palm oil in Indonesia. It has actually reduced. There's now scarcity. So hence, since there's scarcity, there's lower supply and then higher prices. So all these factors have actually increased the prices of palm oil in aggregates. But then if you're looking at if these prices will remain high, it really depends on how long this Russia and Ukraine war is going to last for. Let's just say it ends. We're now going to look at, okay, so how long is it going to take for Ukraine to recover its agricultural economy? If it's going to take long, then we'll know that there's an issue. But then right now, it's likely to remain high. And then in this year or the next. So
are we saying that we're just solely dependent on importing this oil? So are there no other, maybe like homegrown ways of producing oil to sustain it in Nigeria, to be self-sufficient about this? Depending on the Russian-Ukraine war, because it could last, we don't know how long that's going to last.
It's not really dependent on that, but so there's a high there's a high demand. As you said, it's an essential oil when we use it to cook and everything, so there's a high demand for it. Now, this means that there's high consumption of, we don't have the, Nigeria itself, we don't have the capacity, or we have the capacity, but we've not reached that level yet to produce enough to meet the high demand for consumption of vegetable oil. That's why we import into the country. And then the reasons why, this is basically due to a variety of factors. We can say the supply of inputs, like the seeds. The supply of seeds, it's inadequate. Then the outputs of this thing, they're not, the quality of output is poor. The quality of the seeds after planting, probably based on, due to the fertilizers used or what's not, but we have poor output. Then we don't have sufficient processing methods. I don't know if it's because farmers are not educated enough on how to properly cultivate these crops and all that. Then we don't have good infrastructure system, storage facilities. All of that are factors as to why. But Nigeria actually has the potential to be one of the largest producers of vegetable
potential
oil.
Again there. The potential. Now, speaking of potential and the consumption pattern of Nigerians, we've seen that there's been a switch. Nigerians are now tilting towards healthy living, healthy consumption, and then you see a lot of people buying air fryers instead of maybe using vegetable oils, trying to live more healthy. How do you think, if Nigerians are buying more air fryers and leaving vegetable oils to do their cooking, how do you think that would affect the demand for vegetable oil in the future? Okay,
so overconsumption of vegetable oil actually has health risks. We're looking at obesity, heart diseases, stroke and the likes. And then I would like to say you're one of us, are trying to look at healthier options. So now, healthier options, air fryer, that's where air fryer comes in. It's a healthier way of cooking. But then it's frying. It's not necessarily cooking so how many people can actually afford air fryers? An average air fryer should cost like 25,000, 30,000. Not everyone can actually afford this. But for those who can afford it, we can say, okay, they might reduce the demand for vegetable oil. But, okay, let's just say everyone can afford vegetable oil. Everyone can afford air fryer. How many things can you use the air fryer for? It's just for frying proteins or fries or whatnot. But I can't cook my native dish with vegetable oil. But I would need to cook this. So I don't think it's based on the fact that there are fewer. Not everyone can afford it. It's not. It might not really affect the demand for vegetable oil. I mean, unless that's if we're comparing demand for air fryer to on vegetable, because those that can't afford this will fall back on vegetable oil. They will deep fry that protein that they want to eat. Do you understand? But then if we're looking at other healthier options that's to like reducing the quantity of oil you use and all of that, we can say that might affect the demand, but not air fryer as on its own. So yeah.
I know you talked about some of the impediments, some of the factors maybe hindering Nigeria from, importing or being an exporter of these products. But what other programs, apart from the Anchor Burrows program, the feeder stock program that the government has in place to try and, build self-sufficiency in the country for certain products? We see rice and then other vegetables, and then we move into wheat and, now cashew. What do you think can be done? What structure do you think can really be done or put in place to ensure that we are now exporting vegetable oils and not importing in large quantities?
I mean, like I said, we have the potential. So we have all the like the crops and all that. We need to educate the farmers more. Okay. We need to have more private investors that are willing to put in the effort or put in their all to make sure that this works. We need to have the government's more hands-on on this thing. I think that in the long run, if there's intentionality, we should actually see progress. I mean, that's what these programs, like the Anchor Burrows program, I think there's progress, but we're not just not here.
Is there traction? Have we really gained traction with the Anchor Burrows program?
I believe so. I believe so. If you're comparing before to now, there's progress. There might not be data to actually say so, but there's progress. It's just like, are we there yet? That's the issue.
The CBN is actually chasing the people under the Anchor Burrows program to pay back the loans. So if they're unable to pay for these loans, you think that the people are able to take more loans?
I'm not sure.
So thank you so much, Abibola Adigo, Analyst Financial Derivatives, for sharing your perspectives on us on Business Incorporated. Thank you. And that's moving on to other stories. The plan of the Federal Ministry of Agriculture and Rural Development to establish staple crop processing zones in 6 geopolitical regions of the country has been generating some reactions. The Chief Executive Officer of Ella Lakes PLC, Mr. Chuka Murdi, who was on our Business Morning show earlier today, believes that the zones can only be effective when there is sufficient infrastructural development.
Essentially, the key is the intention is to boost food production significantly in 18 staple crops, which they're dedicated to doing: cassava, millet, sorghum, which are most of the crops that we're doing. But I think it is important and necessary to have the government side involved, because providing our own infrastructure is certainly not possible from the point of view of you need roads, infrastructure, feeder roads. That's the work of government. And I think it's going to be possible for private sector companies to actually start to develop their own external infrastructure. Roads in the farms, processing facilities, so we have a rice mill. And so I think the value addition to the crops in terms of processing internally and processing infrastructure is for the private sector players. But in terms of the goal to get crops from the farm gate to the market, and so there's destruction of value in that intervening period. But of course, you need to have power. You need to have a low inflation environment in order to finance facilities for processing, for preservation also. So I think one has to take a holistic look at these things. It can't be done in isolation, and that's the point of a whole processing zone, that you're looking at all these various aspects within one ecosystem.
Now the African Development Bank, AFDB, says Africa has been losing 5 to 15% of its gross domestic product, GDP per capita growth, to climate change and its related impacts. According to the AFDB, the continent needs about $1.6 trillion between 2022 and 2030 to meet its nationally determined contributions. NDCS, the Development Bank, adds that collectively, African countries received only $18.3 billion in climate finance between 2016 and 2019, resulting in a climate finance gap of up to $1.28 trillion annually from 2020 to 2030. Now, Cameroon shippers can now import their cargoes through the Lekki deep sea port and transit them to their various destinations due to the renewed efficiency in the Nigerian seaport. Nigerian Ports Authority, NPS, says it's working with the Nigerian Shippers Council on affordable tariffs for landlocked transit cargoes that will be imported into Nigeria when the Lekki deep sea port becomes operational by September the 16th. Now, Egypt plans to link its Mesa network with Russian bank card Mir for payment in rubles by the end of 2022. And that's according to the Planning and Budget Committee in the Egyptian House of Representatives. The committee further says that this step comes as part of a plan from the Central Bank of Egypt to enhance commercial transactions, reduce deficits, and boost exports. And that's it on Business Incorporated. I'm Will Ibang. Thanks for watching.